Hi guys, this is Jimmy G, and today I'm just going to go over Fibonacci's. Right, Fibonacci's you'll be trading using price from the start of the trend to the end of the trend. So I'm just going to zoom in a little bit more, and I'm going to look for starts and ends of trends. So let's see, bottom. Let me just check the bottom was 26th of February. So I've got 26th of February, right about here. Zoom in a bit more. Right now, price. Right now, price hit my support line and then came up. So what you're waiting for a new high and then to drop down. So you would draw your Fibonacci's from the beginning of the trend, which was actually the bottom of the zone here. So you didn't come back down after, it only continued up. So you would have been in this trade, you could have traded it here, put your high here, and you'll be looking for retracements until it breaches the zero. Right, so you would have drawn your line at this point here, and price came back down. You know, price could drop to the 23.6, or it could drop to the 38.2, or the 50, or the 61.8. These are your levels, but usually price would most likely to be around this area, the 38.2 to the 50 to 61. Some people, when this happens, they like to use it once and then don't use it again. But for me, I like to keep these Fibonacci's on, and just know which Fibonacci's I'm looking at. Unless the reason that I would change this Fibonacci if 61 was breached and went back down to the 100, then I would have to draw a new Fibonacci, and I wouldn't count that Fibonacci anymore. Right, so you can see here, the Fibonacci, the highest was here, came out to 38.2, then it zoomed up all the way up, and then it came back down, and I would have held this Fibonacci here, and it's just nice money you would have made, nice pips. Right, so here you would have made potential of over 100 pips, then it fell back down, bounced off the 23.6 next, you made 80 pips on that movement. Down here, so this one you would have hit the 38.2, depends where you got in, and it went all the way up, 57 pips, came back down, and then zoomed all the way up. Right, so when I have that one, there's a new high because it broke to zero, so I could put another Fibonacci zone here. I'm looking for retracements, so I'm just going to color that blue, and let's make it a bit not so wide because it didn't go. You wouldn't know how far it would extend, but you can see here. This time, before it was 38 was used, and then this time it used the 61.8 was used next. So that bounced off the 61.8, could have made a potential of 80 pips. But the reason you can see now, you see the 61.8, it's almost the same line as the 38.2. So this is a combination of Fibonacci's that you could do as a double Fibonacci. So if I'm looking for the 38 line, it's just the top of that Fibonacci, so it's really nothing. But this is like a double one, so this is something you can consider as well. So basically, price went up, came up to 23.6, came back down 38.2, bounced up to the 23.6, and came back to the 58, and then zoomed all the way up. Right, this is just using the Fibonacci retracements, which I'll just cover only in this lesson. Right, so next move was to upside up here. So now you would be trading, you can either trade from here to the top, looking for retracements, the new high, and didn't happen. Well, it bounced on a 23.6 and then zoomed up, as you can see. Right, another way you could do a Fibonacci's, you could also trade from when the Fibonacci's been hit. So you see this one before, it was hit the 38.2 and then went up, and then it came back before this zero is breached. After the zero is breached, you could also draw a Fibonacci from here. So you can draw a Fibonacci from after the zero has been breached, right? So before all Fibonacci was here, this one was breached to this side here. You could trade it from the Fibonacci. Yeah, you could. So you'd be trading it from here to the down to the. You could. This one really wouldn't matter, but I can show you another few examples later. Is that you follow the new trend where the trend began to upside. So after it came down here, you would have drawn it from the new high, which is here, to the bounce, which was here. Oh, sorry, hang on, put the wrong way around. Sorry, it's just because it's so zoomed out. Right, so here be the lines you would draw. So you can see here it broke out of the 61.8, so not so good. So yeah, it depends how the price moves. I can show you another example. Well, when it moves above, like, let me show you from drawing it from here to the high. Right, it bounced from the 23.6, so that's a little bit from 38.2, but we'll not count that one. Right, so here comes in the trend. Now you knew it's hit this zone, so now you're drawing a new Fibonacci off this zone. Right, so you're drawing it from here, looking for the high here. So you would have drawn it after this high happens. You would draw it from the bottom, the rejection here, and it pushed through this zone. So your high would be here. You know, your high would be first be there, and then it would be the higher high. So you'd have moved it a little bit, and then price bounced off the 50, and then zoomed all the way up. And then you would draw it came back down here, so you could draw another Fibonacci over here, and that it's not very clear. Hang on, do it darker. Dark blue. Right, so after from here to this line, we can zoom in a bit. So 8th of March. Right, this is our next Fibonacci. 50 bounced a tiny bit, but 61 was bounced below, and it went up. Didn't break with 60. Well, it didn't break. It didn't break much. No, it broke. Didn't break. Sorry, it broke a little bit, but no more than 20 pips. And then so I would still keep this as valid until it would break the bottom, so it would go further down than here. So if it was to break the 100, then it wouldn't be valid anymore. Right, so it did break 100 down here, so we wouldn't use Fibonacci's, but you can see it would have made a nice movement from the zone. I know we've drawn it in the past, but I'm just presuming price was here before. Right, so another Fibonacci, looking for the beginning of the trend to the end of the trend would be here. So price did stop at the 38 level, came up, stopped at the 50, came up, and then stopped it with 61 and came up. You know, remember the Fibonacci that your market makers, they know where everyone draws Fibonacci's as well, so you just got to be aware of it. And doesn't mean that it's guaranteed. You know, if this happened here, for me personally, I would have taken a trade at the 50 mark or 38 mark. The 61, I would have not bothered because it's not in a zone, but I'll discuss that in later lessons. And you can see it broke out of a 61 past 100 and fell all the way down, and it was quite a steep with no retracement. So you wouldn't be drawing Fibonacci's unless it on a steep trend like that. You would be drawing it because you wouldn't know. So after here, price reached here, you'd be looking for a retracement, and retracement didn't even happen. No, it didn't even reach a 23.6. So no retracement. Came back down, hit the zone. You'd be looking for Fibonacci's. So you draw the bottom of the trend to the top of the trend, which ended here. And price just bounced off the 23.6 and then zoomed all the way up. You could take, because you can see that. I'll go over this later, but I'll just quickly mention it. You can see that it hit off the 23.6 and then it didn't reach 38.2. So this gives you a good indication that it's going to break out of this zone. And price action, nice price action here, broke out, bounced off, all the way up. Right, so you're looking for price to come bounce back down. Bounce back up. Sorry. So you're going on an uptrend. So beginning of this trend. I know there's nothing happened, but once you get used to it, you can see this also happened. Top of here was the end of the trend here. Let me make it a bit tighter. Right. So here, what happened? Price hit the 23.6. Didn't hit the 38.2 and went all the way up to the new high. So you would see the bottom of the trend. You could just actually adjust that here to be that way, or you could do a fresh Fibonacci from here to here, or you could do both. It's up to you. And what happened? It would be set up here. Price came down, bounced it, played around on the 23.6, came down to 38.2, was rejected up, and then fell back down. So I would be, for my personally, if I was seeing this kind of Fibonacci live, like before seeing all this, I would be thinking about the 50 to 68 mark. It's between my zones, so I would be looking for an entry to the upside. So if I took the entry right directly on here, I would have made still 50 pips. You trail your stops. Could still have made money in this, and then I'd be looking with maybe a 30 pip stop loss, or 40, 50, depends. Right, so bounced off this zone again. That's another 31 pips, 33 pips. Then what happened? Price broke really strongly into the zone, followed by a rejection of the bottom of the zone, tiny rejection, and it just fell flat to the next zone, and it broke the 61.8. Didn't even hit the 61.8. I mean, sorry, it didn't even hit that one and rejected. It just fell right through it. Right, so you'd be out of this trade now, unless you took a breakout. It's just following Fibonacci's, and in Fibonacci's again, you'd be looking for a rejection from the top of the trend here to the bottom. didn't even hit the 23.6. You would do the next bottom, didn't hit, next bottom, didn't hit, and you'd be drawing all the way to here, didn't hit. So let's talk about this candle here, and then to here, bottom here, perfect on the zone. Right, perfect on the zone. We're looking for price to come to 23.6 and then take it to the downside, or 38.2 or 50 or 61, and you can see looking here, hit the 23.6, came back down, 50 pip profit. If you take it from this zone, if you draw down of just 190 pips, sorry, 19 pips, right, and then it could have went all the way down to this zone, but it didn't. It just played around. You would have not known. This is ranging, so this whole day here on the 25th of March was just a ranging day. In Forex, it would have drove you a bit crazy, or you would have like left the trade or got impatient, because the whole day it only moved like 50 pips up and down the entire day. For binary options, it's really good, but for Forex, it would just drive you crazy unless you're doing like scalping, like short scalps. But this is just training everyone on the TrueFibonacci system that I'm using. So you can see price just bounced around. It could have went to the downside, or it could have went to the upside. You can see it came up to the upside. Let me just extend it a bit more so you can see it better. Right, extend it a little bit more. Too far. Around. I'll just keep that there actually. Right, so played around the zone, came up to the 20, hit the 23, you could have made 50 pips, didn't hit the 23 again, hit the 23, you would have been stopped out, or you would have made 8 pips, which I doubt anyone's taking 8 pip profit in this type of trades. So you did it if it was stopped out to like 20 pips or whatever, and came up to the 38.2. It wasn't rejected, and so you'd be waiting. But you remember I said that I'd be waiting for the zone to match the Fibonacci's, so anywhere from the 38 to 50, taking the trade. So it came back down in the zone. You could have made, if you took it at the bottom of the zone or middle of the zone, so you could have made still 40 pips. Took it in the middle of the zone, you could have made still 68 pips, which is pretty good. And then broke out of the zone later. You see it played around. This was like price action. See, it came up swimming up past the zone. So it zigzagged up here and then down here. Hit the 50, rejected down, maybe 27 pip profit, and was it pushed all the way up past 61. So now past 61 now. This looks like the end of the downtrend, and you wouldn't know, but you can see later it didn't hit the 100 up there, so we can still be thinking it's going on a downtrend, but wouldn't know. So it didn't touch any of these lines, didn't touch any of the zones that I've drawn, just bounced around, played around, hit this line, came down 61. I'm still thinking it's valid if I'm thinking it's still going to go down. It hasn't touched the 100, so I could still believe price is going to go down. You would have made, I mean, doesn't mean that you're still thinking it's going down, but price is going up. Doesn't mean that you're losing, because you could be still swinging this. You could be taking that trade here to the downside, which is still over 100 pips, another maybe 50 pips, always making profits, and smaller stop losses. Right, so after, you can see here it was at 100, you can just see decide that now it's an uptrend. So you'll be looking for where price began to the uptrend. So I'm not counting this one because price went up and then down. The price began here to me, over here, not here. People like to say it should be the bottom, but this already happened, this move to me. Price, where did the trend start? So the trend started to me here. So I'm trading off that tiny bit here at the bottom. Trend started for me. So here, top of it here, I wouldn't know yet. Let me just adjust that to be right. Yeah, that's right to me. So this is my Fibonacci's. You can see here, after this happened, zoomed down to the 50 and then made a climb up, a gap above the 0, and then it came back down to the 38.2 and then continued to uptrend. So I would be drawing another Fibonacci from the beginning of the trend, which is here, to the top, which is up here. So beginning of the little trend, looking for retracements. I'll just color this differently. Alright, so let me zoom in a bit more. That's on the 25th of April. Right, 25th of April, we've got this line, beginning of the trend, bottom of the trend to the top of the trend, should be here. And after this happened, price bounced off the 38.2, almost hit the 50, but didn't. And you could have been taking the zone down, but because it's an uptrend now, I'm going up now. I know I was going a bit down before, but now I'm going up because I decided after the 0 was, after the 100 was broken, I'm going the opposite side now. So my bias is to the upside because of that confirmation. Right, so watching the trade, so it hit the 38.2, didn't hit the 50, came up back to the 23, just bounced around the Fibonacci's, and then it finally decided to break out to the upside to this zone. Beginning of the trend, where did the trend start? Trend started here. I'll be drawing another Fibonacci from here, not here, not here, or you could extend it this one. I mean, it's up to you, but you can extend it to here. But I would see that this is done. This is finished for me. But I would keep it too, you know, because I know it's been bounced off of 38.2, so I would keep that as a previous Fibonacci. I can look back and make an analysis using these lines too. Right, so it bounced off of 38.2, so I'm going to be drawing a new Fibonacci from here to top of it here. Let me put here, just trying to show you how it reacts to it. And then I would color it a dark, let's say dark medium blue, whatever. Right, top of my Fibonacci would be here. And so price hit the 23.6, not a steep uptrend, bounce right off my zone. You see the 38.2 with the Fibonacci's in the zone. So I've taken this trade to upside, could have made 50 pips, 40 pips maybe, whatever. Came back down, probably wasn't stopped out. 20, oh, maybe if I had a 30 pip stop, it could have been stopped out. 25, still not stopped out. But you could have been making some profits on these bounces of the zones. So I'm still thinking it's going up. And then price came back down, hit the 61.8, and then came up back to the zone, 40 pip movement up, then dropped back down, 61.8. You see the Fibonacci's, these are Fibonacci's are retracements of the trend. So because you've got Fibonacci's going up, you won't, your idea is to go up. So you're not looking for trades to the downside. You're only looking for trades to the upside until you decide to the trend's going down. Right, so would have been here, came down to 61.8, and then bounced up again. Could be a 40 pip movement, or could have collected some pips, or your trailing stop, which I would have definitely made profit on from myself personally with my money management. And then something must have happened. This could have been what, 27th of April, I don't know, could be some news event. But because this is the thing is that if you're going up, I'll discuss this in another lesson. But if you're going up, if a news comes out and hits one of these zones, you'll be taking that to the upside, because you know that price has been trending up. So it doesn't matter if it's news or anything. Right, so anyway, Fibonacci is going back to the lesson. Fibonacci's hit the 61.8, played above it, bounced it around, hit all the way up, so we made another 95 pips, came back down below the zone, hit the 50, took it upside, 80 pips, then played around, bounced of the 23.6. I wouldn't have taken trade here. I'm only taking trades, probably in this trade here, and then beautiful, you know, bouncing off here, bouncing up, down, off the zero. I'm not making a new Fibonacci's because it doesn't extend past the zero too much, and I've still got this this resistance line of mine, so it's no need to draw Fibonacci's. I'll be using the same one until it breaks or it zooms up much higher, which it did. Right, so new Fibonacci's because of the new high up here. So I'll be drawing the beginning of the trend. So the beginning of the trend is not here because it zigzagged up. If you can see, it's up here like a zigzag. So beginning of the trend to me is here to the high, and I'll color that purple. Right, so this is my new Fibonacci drawn. Right, so what happened after it came up to the top of here? I'll be looking for price. It broke, zooming past the 23.6, past the 38.2, came through this zone. I could have been looking to take price about 61.8. Looks like I would have definitely been stopped out in this trade. This price is just too strong, and it came back, zooming down, and look at the reaction past the 100. It just zoomed really strongly down. This would be enough to see this type of movement. This would be enough. It's like 200 pip movement. This would be enough for me to change my bias to the downside. And right now it's going down. So I'll be looking for retracements of this trend. So from the top to the bottom, the trend started at the top here. I'll color it a different color later. Right, so going to the top, looking for retracements. Nothing happened here. You know, I would have drawn it here, but didn't hit the 23.6. Here, still didn't retrace. And then I would have drawn it down here. Let's color it orange. It's quite hard to see, sorry about that. So that set up brown. Right. So after that, I hit the 23.6 and then went zooming down. So because of this movement as well, I hit the 23.6 and then came back down almost to a zero. This would just confirm for me to go down now in the Fibonacci's. So hit the top of the zone, came down, top of the zone, came down, lots of movements, 78 pip movements, 80 pip movements. I've been making a lot of money on this pair if you're trading the true way. And this is today. So this is NFP movement. So because of this movement here, I'm thinking it's still going to go down on the downside. So I'm trading the GBP USD to the downside. So Fibonacci, it's hitting the 23.6, hit it again, came back down, and it's breaking my zero, but I'm still keeping the same Fibonacci unless it drops down a lot more. And you can see it's still got, it could drop down possibly to another 352 pips to a downside if it breaks this strong support resistance lines. Well, I call these true support resistance lines. Right, so that's a long video, but this is a Fibonacci retracements with Jimmy G. Thank you.